From the floor of the CME Group, this is Danny Riley with today's Cash Close. You know what this video is going to be called? It's going to be called the Pit Bulls Thursday and Friday Low. We're going to make this short and sweet. The high of the day in the S&P came in at 1923.30 midday. The low came in at 1905.30 early morning or after the open. And last, we're 1916 even. We're up 3 handles on the day. Total volume, we've got 1.7 million minis traded and 2.3 thousand big S&Ps traded in the pit. MOC, buy 110 million. Tomorrow we've got the jobless claims number, we've got the EIA Natural Gas Report, we have consumer credit, we have the Fed balance sheet and money supply. I think there's some T-bill or T-bond auctions or something in there. Look, it's been a dead day. And for the most part, the S&P stayed in about a 3-handle range from like 1914 or 1913 and a half to 1916, something like that, for a good percentage of the day. Now, narrow ranges create lower volumes, but really, to tell you the truth, the S&P is doing fairly good volume for a day that we had a very much narrower range and much lower type trade. Now, let's talk a little bit about the Pit Bulls Thursday, Friday low. For years, and I've tried to explain this to you guys, I don't really know what it's about. I don't know why, but there seems to be a reload process the week before the expiration, this being the August expiration. Now, after we've sold off, and we've sold off, and we've sold off the last couple of days, a lot of guys on Twitter, a lot of guys on Facebook, a lot of guys throughout our whole spectrum are asking, what about the Thursday, Friday low? And on Twitter especially. And I do suspect that there's going to be some type of Thursday, Friday low, some type of bounce. But I gotta reemphasize one thing. If the Russians start invading Ukraine, and there's heavy loss of life on the Ukrainian side, the markets are going to react in kind to the downside very, very quickly. And you know what? As much of a bull as I am, I don't get this warm, fuzzy feeling right now about the way the market's reacting. Does that mean they can't go up? No, that doesn't mean they can't go up. But right now, I think what we're in a struggling mode for the S&P right now. And as I said earlier on the first video today, if the S&P goes up, first resistance is going to be at the 1833, 1838 level, and then up toward the 1850, 1851 level. I think that's a far stretch. On the downside, though, we've got a lot of stops under those current lows. And if the S&P starts catapulting down, it could go down very, very quickly. And the downside levels, what we've got is we've got the 1881, 1885 level, or 1883 level. And then below that, we've got the 1860 level, which I believe is a critical level on the downside. We're going to leave it like that, you guys. It's a chop shop today, and we'll see you tomorrow on the opening print.